Welcome to the live virtual revisionary classes of ICAI. Today we will be covering cost and management accounting, material and employee cost. My name is CA Anjali Agarwal. So before we start with revision of material cost, let's look at some important concepts here. How does the material flow in an organization? So it starts with procurement of raw material. How is raw material used? So raw material is used on the factory floor. So whenever the factory floor or the production department requires raw material, it will make a request to the stores department where the raw material is stored. So a material request note or a MRN is given to the stores department, material requisition note, that we require raw material. The stores department will have raw material stored with it. So it will issue the raw material to the production department. And after having issued or when realizes that the stocks of raw material has come down, it will make a request to the purchase department that this raw material is about to be finished or they are no longer of the optimum level which we should keep. So this will make a request to the purchase department that please purchase raw material for us. This raw material is now has gone below the levels that we need to replenish them. So this is called a purchase requisition note. The purchase department will invite tenders from the various suppliers and it will choose a supplier, and to this supplier it will place a purchase order. So when the purchase department places a purchase order to the supplier sends these goods to the organization. These are then inspected, checked for quality and quantity, that whatever we have ordered, have we received the same thing or not? And then they are placed in the stores department. Once they are accepted, the stores, they are given a goods received note, GRN. GRN stands for goods received note. That is a acceptance that goods have been received by the organization. And if any goods are not found satisfactory, they are not of good quality or quantity, then they are also returned. So this is how the process flows for the material. So one has to be very careful in material control that procurement has to be done in a proper manner. That means we'll talk about how many units should be ordered. Most important concept, economic order quantity. And secondly, when the raw materials should be ordered, when to order. So we will keep different stock levels to ensure that the stocks are or the raw material is ordered at the right time. So we will talk here about minimum level, maximum level, reorder level, average level, and also a danger level. So after procurement, the inventory has to be stored. So there has to be storage controls also. So at the time of storage, you have to ensure that they are kept properly. They do not deteriorate or they do not get destroyed. So proper care has to be taken in the stores. And finally, from stores, they have to be issued. So when Material is controlled at all the levels from procurement to storage to issue, then we get a good control over material and costs become effective. So let us first start with the topic economic order quantity. Look at a question here, and from there we will try to understand what do we mean by EOQ. So let's say XYZ X Limited is a company and it consumes 24,000 bearings per annum on a steady basis. So the consumption of raw material or some bearings is 24,000 bearings every year. It is estimated that it will cost 10 paisa as inventory holding cost per bearing per month. And the ordering cost is rupees 324 per order. So the first question is, what should be the optimum order size? That's what EOQ will answer. Now, EOQ is a concept which talks about, first let me explain, economic order quantity. It's given by a formula which is called under root 2 into U or A into P, cost of placing an order, divided by C or A. So where U or A means annual usage. So how many units do you require annually? P here stands for cost of placing an order. Whenever you place an order, how much does it cost? And C or S stands for carrying costs or storing 1 unit for 1 year. This may also be called as holding costs. So if you look at the question in the previous slide, how much was the consumption per annum? It is 24,000. So you will become 24,000. Annual consumption is 24,000 bearings. What is P? Cost of placing an order. So every time you place an order, it will cost you rupees 324. And what is S or storage or carrying cost? It is 10 paisa per inventory per bearing per month. So if it is 0.10 per month per bearing, it will become 0.10 into 12, 1.20 per annum. So we have got all the three information that we need in the formula. It becomes 2 into 24,000 into 324 divided by 1.2. So this will become 2 into, you can all use your calculator simultaneously. Under root 1296 and this is equal to 3,600 bearings should be ordered at a time. So what should be the right order? should be 3,600 bearings. Now, if you have 24,000 bearings to be consumed in a year and you are going to place an order for 3,600 bearings, this also means that your number of orders in a year would be 6.66. So you have to place 6.67 orders every year. Now, orders cannot be placed in fraction, so we can round it off to 7 orders every year. But for theoretical purposes, we will assume that we can keep the number of orders in fraction, right? Thank you, Enam. Right? Now, what do we understand by cost of placing an order and cost of carrying one unit? So let's understand this in a little detail. Cost of placing an order means whenever you place an order, you have to go to the market. There would be freight costs, carriage costs. There would be purchase department salaries. Then there would be loading, unloading. All these costs are involved whenever you place an order. So generally, you must have seen that whenever a thing is available in a nearby place, you can go every now and then. You buy in small quantities. But if you know that your order is coming from very far off and you can't go there again and again, you order bulk quantity. So cost of placing an order depends upon what would be the freight cost, carriage, and all these costs. What is the cost of storing then? Cost of storing is you have to take care of the raw material. But the most important thing is the interest cost as an opportunity cost. Inventory. So you block this capital and you lose the interest cost, or so do you calculate the opportunity cost involved while storing the raw material. Apart from this, wherever you keep the raw material, there would be some rent of space. It will occupy some space, and that would be another cost involved in storing. Then there has to be some godown keeper or someone who's looking after these goods. So you have to incur the salary of that person who's looking after these goods. You might have to get your goods insured. So the more amount of raw material or inventory you will keep, the insured or the insurance premium is another cost, which will also increase as and when the raw material increases. Then if you keep a lot of raw material, it may get damaged, destroyed, or deteriorated, or it may also become obsolete. So this is another cost that you incur when you keep a lot of raw material. So looking at these two types of cost, it implies that if on the x-axis you keep units, so more units you will keep, the storage costs will increase. So if I keep only 1 or 2 units, my investment is low, my interest cost as an opportunity cost is low. I don't need much rent space to keep 1 or 2 units. I will not even be giving more salary to the warehouse keeper as his workload is very less. The insurance premium will also be less because I am keeping only 1 or 2 units. So let's say if each unit is costing rupee 100 per unit. So if I just keep 1 or 2 units, just 100 or 200 rupees is blocked. Godown keeper also will have to look at just 1 or 2 units. So his workload is not much. He will not be paid more salary. Insurance premium of asset worth 200 is also less. And 1 or 2 units will be consumed quickly. chances of their becoming obsolete or damaging or destroyed, that becomes also less. But if I keep 1,000, 2,000 units altogether, obviously my investments goes into lakhs. So interest cost, rent of space, everything increases. So we see that storage cost increases with the increase in units. However, this also means that the more units you order, you have to go to the market only maybe once or twice. So if I buy all the 24,000 units bearings that I require in the previous question, I will not incur much cost on placing. How much? Only one time, 324. But if I buy, let's say, 12,000 units, then I have to incur 324 twice. If I buy 6,000 units, in that case, I will have 4 rounds of market. So 324 into 4. So placing cost will be incurred 4 times. So the more units you have, the less is the placing cost. So placing costs behave oppositely to the storage cost. So we have to strike a balance where the total cost is minimum. And total cost is minimum when the placing cost and storage cost intersect. So this is the point when you will have your total cost as the least. So these are the number of units. In the previous question, 3,600 units. These are the number of units you should order. We can also do one thing. Instead of keeping units on the x-axis, we can keep number of orders. So if you have more orders, the placing cost increase. So if I buy 6,000 units at a time, I have 4 orders. If I buy only, let's say, 10 units, then I'll have 24 orders. So the number of orders will increase as and when the number of orders increase, placing costs will increase. However, the storage cost will come down. Why? Because if you have only 4 orders, it means you are keeping 6,000 units ordering at a time. So the storage cost would be higher. But if you are giving 2,400 orders, you are only ordering 10 units. So you are storing less. So storage costs will drop when number of orders increase and placing cost will rise. So you have to look at what is there on the x-axis. Is it number of units or number of orders? If it is units, storage will rise, placing will fall. But if it is number of orders, placing will increase, storage will fall. The same concept, we can also do it in a tabular manner also. Okay. So let's look at the question again. X Limited consumes 24,000 bearings per annum on a steady basis. 10 paisa per inventory cost per bearing per month, and the ordering cost is 324. So what would be the optimum order size for bearing? So we calculated using under and 2 into, you can use A or U, and here you can call it P or for storage, you can call it carrying cost or storage cost. Whatever the alphabet or the denotation you are using, please also explain it in your examination answers. U stands for this, P stands for this, and C or S stands for carrying cost or storage cost. So 2 into 24,000 into cost of placing, that is 324, divided by storage cost was 10 paisa per month. So 10 into 12 paisa, 10 paisa into 12 months, 1.20. And when you solve this, you got an answer that we should be ordering 3,600 bearings at a time. This would give us 6.67 orders. And what would be our storage cost? Storage cost is generally taken on an average. So 3,600 divided by 2, you will be on an average holding 1,800 units. and 1800 units are held every year per annum. So 1800 into 1.20, that would give you 2160 as the total storage cost. And you will see that placing cost 324 into 6.67. Just because we have rounded off 6.66 into 6.67, you might get a little different answer. But if you take 6.6666, you will still get 2160. So do you see the total placing cost and the total storage cost are exactly same. And same thing that is that Muskan wants to ask a question. Yes, Muskan, put it in the
Ma'am,
chat when. Go ahead.
in the test your knowledge questions
Hmm.
of this chapter of question number 5, they
Okay.
have they have rounded off the decimal portion to nearest round figure
Whole
and
number.
not
Right.
taken in points.
Right. So just to explain here, theoretically, it is possible that you may take a fractional thing. Now, we have seen in the previous here that your placing and storage will exactly meet, right? So at these EOQ, the placing and storage is exactly meeting. So placing and storage cost will be exactly same. For that, we can see that 2160 is the placing cost and 2160 is the storage cost. Had I rounded off till 7, I would not have been able to express or to show you this point that they will remain exactly same. Practical purposes, it is not possible to place a 6.67 order, right? Practically, you will place 7 orders, so you will adjust it a little bit in such a way. Maybe you give 6 orders for 3600 and the 7th order for the remaining units, right?
So,
So
ma'am,
to
in exam, what we will do?
uh, we will, if you are taking it in decimals, you can say that theoretically it is possible to take it in decimals. Otherwise, we can round it off also. Perfectly okay. But if you have to prove this point that placing cost and storage cost are exactly equal, you will not be able to prove this by rounding off to 7. Units, if it comes out to be 3602, 3601, that you can round off to 3600, but orders will make a significant impact. Okay, you can round it off to the next number and you can write a note that we are rounding off the number of orders because it is not possible to place orders in fraction, right? If you go to a market to buy something, either you go or you don't go. You cannot go to the market for 5.2 times, right?
Yes, ma'am.
So you can round off the number of orders. But when we are preparing it in a tabular method, then also you will see that if it's, but practically you cannot place orders in fraction. So you can round it off also. Whatever you do, you put a note in your answers, right?
Yes, ma'am. Thank you.
Welcome. So 3600 bearings should be ordered, 6.67, and you can see that placing and storage are exactly equal. Now this is also rounded off to 6.67. So it's coming out to be 2161 something. Yes, Pooja?
Ma'am, if it is asked in MCQ and both options are given, 7 also and 6.67, then what will we do?
It's a good question. I think when you will be giving an option of MCQ, either the question will very specifically ask you to round off the number to the next higher, okay? Or if it doesn't, the two options will not be there. That ambiguity will definitely be taken care of while framing the question. Okay, either there'll
Okay.
be specific instruction in the question that please round off to the nearest number, or if it is not there, the two options will not be there. Okay,
Means that time no, we will not round off, right?
depends if it is mentioned in the question that please mark your answer by rounding off to the whole number, then you will choose that option. If it is not mentioned, Either of the two answers will be there, both will not be there to confuse.
Okay, ma'am. Thank you.
Right. So this is the optimum size of the bearing. Next is assuming that the company has a policy of ordering 6,000 bearings. So if you are going to place an order for 6,000 bearings, 24,000 divided by 6,000. How many orders are you going to place? That will be 4. So what will be your placing cost when you place 4 orders? 4 into 324. 1,296. And what will be your storage cost? Storing cost would be 6,000 units are ordered. On an average, 3,000 units will be held, and 3,000 into 1.20, 3,600 rupees would be the storage cost. So what will be your total cost? Total cost would be 1,296 plus 3,600. Total cost in the sense we are talking about the total relevant cost here. We are not talking about the material cost, because whether you buy 6,000 units at a time, whether you buy 3,600 units at a time, the raw material cost for the 24,000 bearings will remain same. So the total cost comes out to be rupees 4,896. Whereas if you had gone through EOQ, 3,600 bearings, the total cost would have been 2,160 plus 2,160. The total cost would have been 4,320. So you can see that by avoiding the economic order quantity and shifting from 3,600 bearings to 6,000 bearings, we have increased our total inventory holding cost from 4,320. Total cost related to how much unit should be ordered, that has increased from 4,320 to 4,896. So assuming that the company has a policy of 6,000 bearing, how much extra cost would the company be incurring as compared to the optimum order size suggested in A above? So the answer would be 4,896 minus 4,320. So the extra cost would be 576 rupees. So instead of sticking to the 3,600 bearings, if we go to 6,000 bearings in an order, we will increase our total cost to 4,896. The extra cost would be 576. What is the minimum inventory holding cost? So here the minimum inventory holding cost would be 4,320. If we use the EOQ, and 4,320 is the total cost, holding cost would be 2,160. Okay. So I hope this is clear. Economic order quantity is given by the formula under root 2 into U into P upon S, or 2 into A into P upon C. You can use where A is annual usage, P is the cost of placing an order, and C is the, or S is the carrying or storage cost of 1 unit for 1 year. Remember one thing, EOQ is based on certain assumptions, and these assumptions becomes the limitation. 24,000 bearings uniformly throughout the year. So we can say that every month 2,000 units of bearings will be used, right? It will be uniform throughout the year. Secondly, the supplies will also be available throughout the year. So it is not period of phases when the supply of a product is available, and there are parts of the year in the, when the supplies will not be there. So we assume that the supplies will also be uniform. There will not be any chances or likelihood of increase in prices also. So prices remain constant. Isn't it possible that if you know that the price of a particular commodity or a thing will increase from next month, you will not buy the EOQ, you will store more units. Why? Because the extra cost in storing will be more than compensated by the increased price. So this EOQ is based on certain assumptions, and if it is required to order EOQ units only when these assumptions are true. So they also become the limitations of EOQ, right? Another important aspect that I would like to draw your attention on is, see, placing cost would generally be very clearly given that the cost of placing an order is 324 rupees, 400 rupees, 800 rupees, whatever. But storage cost may come in different forms. So storage cost may come, let's say 10% of the inventory. So if we say 10% of the inventory cost, it means that what is the raw material price? If the raw material price is 60, then that means the storage cost is 6 rupee per annum per unit. Okay. And it may also be said that storage cost is 10% of the inventory plus 2% rent and 1% insurance. So in that case, you will have to take 13% of 60. So instead of 6, it will come out to be 7.8. Okay. So you have to take care of this. So it can be given either directly, that storage cost is 10 paisa per unit per annum. In the previous question, it was given monthly, so we multiplied by 12 months. It can also be given as a percentage of cost. So you have to ensure that you are aware of what the raw material cost is. Now, what is the unit of EOQ? The units of EOQ would be exactly the same as your raw material. So if it was here, then we can say the economic order quantity would be that we have to order 3,600 rupees worth of raw material every time. So what is the unit of EOQ? It's the same as the question will suggest. Is it clear? So this is how you calculate the EOQ using the formula. The same thing can also be calculated using a table. So we will just look at it. How do we calculate the EOQ using table? And if there are material discounts, that means the raw material is not available at the same rate throughout. If the vendor is offering material discount at different volumes, then the material cost also differentiates with how many units you order, and material costs also become relevant. So when material cost also becomes relevant, you will compare the total of raw material cost plus ordering cost as well as storage cost, where the total will be least. That would be our decision. That will be the most economical order quantity. So for example, in this question, you can see the purchase department has received an offer of quantity discounts on its order of material as under. So it's saying that the price would be 1,400 per ton if you order anything less than 500. The price will be 1,380 per ton if you order anything from 500 but less than 1,000 tons. And another 20 rupee discount from 1,000 to 2,000, 1,000 including 2,000 not. Another 20 rupee discount per ton, 1,340 if the order size is 2,000 or more but less than 3,000. And if the order size is 3,000 or above, the raw material will be further available at a lower price of 1,320. So the vendor is offering us successive discounts. What should be the EOQ here? So in this, the raw material cost will also become relevant. If you get questions of this type, you can select any order size less than 500. So maybe you select 400 and then you select these things, these levels where the class changes or where the rate changes. So 500, 1,000, 2,000 and 3,000. But if it is specifically given in the question, what should be the order size on which you have to compare? You will use those. How much is the annual requirement? 5,000 tons. So the annual requirement of raw material is 5,000 tons. The delivery cost per order is 1,200. So this is your P. Usage is 5,000 tons and the delivery cost per order is 1,200 rupees. How much is the annual stock holding cost? It is calculated as 20% of the average inventory. So like I said, if the storage cost is given as a percentage of the inventory cost, you will have to calculate 20% of the raw material cost. Now the problem is raw material price is not constant. How much it is? It is 1,400 if you order anything less than 500 tons. So then it will be 1,400 into 20%. It will become 280 rupee per unit per annum. However, if it is available for 1,380, this same figure will become 276. If it is available for 1,360, it will become 272. So every time there is a drop of 20 rupees in the raw material price, the holding cost will also drop by 4 rupees, 20% of 24 rupees. If it is 1,340, it will be 270. So now we have calculated per annum. Either you can do this, or you can also say that if I'm going to order 400 units, let's say 400 tons, my total investment would be 400 into 1,400 tons. My average investment would be 400 into 1,400 tons divided by 2 on an average half, and then 20%. So whether you solve this equation or you first calculate 1,400 into 20%, you will get the same answer. So this one is giving you 280 per unit per annum. So if I order 400 units, on an average, I hold 200 units, and 200 into 280 would be my storage cost. So either you can directly calculate using your total investment, divide by 2 average investment multiplied by the storage percentage. Or you can first calculate how much it is going to cost per unit per annum. So 280. So instead of writing this, you first solve this and then multiply by 280 directly. One and the same thing. So you can either take investment or you can calculate the cost of holding 1 unit per annum. So the annual requirement is 5,000, which is yeah, it will be 268, right? Thank you. 4 rupees will be reduced for every investment. And at 1,320, it will be 264. So with every 20 rupee fall in price, 20 into 20%, the storage cost will fall by 4 rupee per unit. So the annual requirement is 5,000 tons. Delivery cost per order is 1,200, and stock holding cost at 20% we have calculated. The purchase department wants you to consider the following purchase options and advise which among them would be the most economical order quantity. But remember, now we have to also consider the raw material cost, because every time you have a change in the number of units, the raw material price is also changing. Let's do it in a tabular form. So how many units ordered? We'll keep it to the figures which the question has provided us: 400, 500, 1000, 2000, and 3000. So, number of orders, it will be usage, total units ordered divided by how much quantity you are ordering. 5000 divided by 400. So your usage is 5000 and you are ordering 400 units. So this is again 12.5. Once again, the question arises, can we order 12.5 orders? No, either we can order 12 or we can order 13. But because the question is specifically saying, for theoretical purpose, I'll give a note that I'm keeping the fractions, though it is only theoretical possible. 5000 divided by 500, 10. 5000 divided by 1000, 5. 5000 divided by 2000, 2.5. And 5000 divided by 3000, 1.6666, but I'll round it off to 1.67. So you see, if you're doing this question, all your orders are generally under fraction. So for theoretical purpose, you can continue with this. Otherwise, your final answer of EOQ will get distorted. So how many number of orders we are placing? These are the number of orders. Then what would be the placing cost? Placing cost would be 1200 per order. This multiplied by number of orders. So 1200 into 12.5. 15,000. 1200 into 10, 12,000. 1200 into 5, 6,000. 1200 into 2.5, 3,000. And 1200 into 1.66, 2,000. What would be the storage costs? Like I said, storage cost can be calculated in two ways. 400 is the number of units you are ordering. 1400 is your investment. Divide by 2 is your average investment. And 20% of that is your storage cost. So this will come out to be 280 into 200, 56,000 rupees. What would be the material cost? Material cost would be 5,000 units are going to be ordered, 12.5 times, 400 units each, and 5,000 multiplied by 1400 would be your total material cost. Which comes out to be rupees 70 lakh. Right? So your total cost would be 70 lakhs, 56,000 plus 15,000. So 70 lakh, 71,000. What if you place 500 units at a time? So you will be giving 10 orders. 1200 into 10, your placing cost would be 12,000. And what would be your storage cost? So this time the raw material is going to be available for 1380. So I can say 500 units ordered, on an average 250 units held, multiplied by, instead of 280, 276. So 1380 into 20%. So 250 into 276, your storage cost will increase to 69,000. You can see the placing cost has come down from 15,000 to 12,000, but your storage cost has gone up. More units, more storage, less placing. More number of orders, placing will be less number of orders, placing will decrease, storage will increase. Here, 1000 divided by 2, on an average 500 units held, and 272 will be the storage cost per unit per annum. But you will place 5 orders. So ultimately, you're going to purchase 5,000 units, and these 5,000 units will now be available at 1360. So 1360 into 20% is 272, or you can directly say 1000 into 1360 divided by 2 into 20%. Here, this costs you 500 into 272. So your cost is 1,36,000. Raw material would have costed us 69 lakhs here. 20 into 5,000. That would be the discount. So 1 lakh would be the discount from 70 lakh. And total cost here would be 69 lakh, 69,000 plus 12,000. So 69 lakhs, 81,000. Here, the raw material will cost us 68 lakhs. Total cost would be 68 lakhs plus 13,600 plus 6,000. So it will be 68 lakhs, 19,600. If you place 2,000 units, you are going to give 2.5 orders. 2.5 into 1,200, your total placing cost would be 3,000. And on an average, you will be holding 1,000 units, which will cost you 268 rupee per unit per annum. So total cost would be 268 1,000. So 2,68,000. Just let me check this calculation. 272 to 500. This is 1,36,000. So 68, 69, 36. That's 6,000. 69 lakh 42,000. Now raw material will be available to us at 1340. So it will be 67 lakh. And our total cost would be again 67 lakhs plus 2,68,000 plus 3,000. 69 lakhs 71,000. If we order 3,000 units, 2,000 would be the placing cost, and 3,000 divided by 2 on an average 1,500 units, each costing 264 per unit per annum. So 1,500 is held into 264. Your storage cost will again increase by 3,96,000. So you can see that the placing storage cost is rising significantly. Despite the discounts, the more units you hold, the storage cost is rising significantly. And 5,000 into 1,320, the raw material price now would be 66 lakh. 66 lakhs plus 3,96,000 and plus 2,000. So your total cost is 69 lakh 98,000. When you look at these figures, which is that level where you find that your total cost is least? So we see that the total cost is least at 69 lakh 42,000, which means we should place 5 orders and order 1,000 units at a time. Because of material discounts, you don't see the storage and placing exactly same, like in EOQ. But here, this comes out to be the least cost. So we are going to place 5 orders and we are going to order 1,000 units every time. So the EOQ is now 1,000 units. Our total cost together with the material cost will be 69,42,000. So when you have tables, you have to first take how many units ordered, number of orders, what would be the placing cost, what would be the storage cost. Include the material cost only if there are material discounts, otherwise not. Then material cost also becomes relevant if there are successive discounts. And then you see where do you have your total cost as the least total cost. That is your answer. If you had to do a simple question, you can also start with number of orders first. So you can increase the orders like 1, 2, 3, 4, so on. For example, our first question where 24,000 units bearings were ordered, required annually. So if you place one order, units ordered would be 24,000. If you place two orders, units ordered would be 12,000. If you place three orders, units ordered would be 8,000. If you place four orders, units ordered would be 6,000. If you place five orders, then it would be 4,800. If you place six orders, it would be 4,000. And then you can compare the placing cost and the storage costs. Placing cost would be 1 into 324. So on. And what would be the storage cost? Half of 24,000. 12,000 multiplied by 1.2. 6,000 multiplied by 1.2. And 4,000 multiplied by 1.2. 3,000 multiplied by 1.2. 2,400 multiplied by 1.2. And 2,000 multiplied by 1.2. This way, you will add placing plus storage, and you will place that many number of orders where the total cost is least. This type of solution will not give you a fraction in number of orders. Okay. You have a doubt in illustration 8, Muskan, of the ICI material, right? I will just take up the ICI material towards the end of the session, and then we'll discuss it if it is okay, right? Just let me complete the concepts first here. Now, supposing in the previous question, again, I'm coming to that. It was said that 6,000 bearings are to be ordered. How much extra cost? We found that the extra cost was 576. This can also be asked in a sense that how much should be the discount offered by the vendor so as to lure you or to induce you to order 6,000 bearings. So if the vendor is ready to offer us a discount of 576 rupees at least, we may think about shifting from 3,600 bearings to 6,000 bearings. So let's say if the bearings cost is 1 rupee per unit. So the total raw material cost is going to be 24,000 only. Now, if I want a discount of 576 rupees on 24,000, so I can say it in percentage that if the vendor offers me a discount of at least 2.4%. So if the vendor is ready to offer me the units for 97.6 rupee, 0.976 rupee per unit bearing, I might shift to moving from 3,600 bearings to 6,000 bearings. So I must get a discount of at least 2.4%. So the raw material price should not be 1 rupee, it should be 0.976. So I hope EOQ And this concept is clear. Let's move on to another concept, which is called reorder levels. Here we talk about when should the order be placed. So EOQ told us that we should place orders for 3,600 bearings in illustration 1 and similarly for 1,000 units in illustration 2. But when should the order be placed? Should the order be placed when the goods are just zero? Or what is the level of inventory that we place the order? Remember, we consume food in our houses. We eat atta or flour. So does your mama order flour every time when it is 100% finished? Or she starts ordering when there is just half a kg, 1 kg left? So that's the concept. The stock should not be totally zero at any point of time in our organization. Otherwise, the entire operations will come to a standstill. So what should be the concept here? The level when you have to place an order should be such that by the time you receive the order or the orders get replenished, you have enough in your stocks to last that period. That period is called lead time. So remember that. So reorder level means when you should place an order. I'll give you an example here. Let's say maximum consumption of atta or flour in your house is per day 2 kgs. The average consumption is 1 kg and minimum consumption is half a kg. Now, how much time does it take to receive these orders? Let's say it takes maximum 10 days. On an average, 3 days, but minimum 1 day. So when should you place an order? Order should be placed in such a way that there is no chance that the stock will be totally zero. So if I say half kg into 1 and I place an order when the raw material stock is half kg, what will happen? It might take 3 days and on average you consume 1 kg. So you require at least 3 kgs, but you only had half a kg. So you will be stock out. You will have to sleep empty stomach. What if I order at 3 kgs? Then also what will happen if it takes 10 days? Even if I consume a minimum of half a kg, I need 10 days into half a kg, 5 kgs. And I have only 3 kgs. So 6 days I'll survive, but 4 days I will have to again sleep empty stomach. So if I want to be 100% sure that no matter what, and even if it takes maximum 10 days, even if it takes 2 kgs per day, I shouldn't be stock out. So my conservative formula goes maximum consumption into maximum time. Now, can you imagine any scenario when you will have to sleep empty stomach? No. If you place your order at 20 kg, even if it takes 10 days, you are comfortable. Even if every day you are consuming 2 kgs, you still have enough. So maximum consumption and to maximum time. This is how many units you should place your order at. So when you are placing your order, when there are 20 kgs in the stocks, you will never be having any situation, any scenario where you will be stock out. So that's the formula for reorder level, maximum consumption into maximum time. However, if you keep some safety stock with you, then you can also go ahead with average consumption into average time. So generally what will happen normally, 1 kg is the consumption and 3 days is the average time within which you will get the raw material. So 1 into 3 kgs, you can place your order at 3 kgs Plus, what happens if it takes maximum consumption, or if it takes more than 3 days, it takes 10 days? You will have some safety stock on which you can rely upon. So there are two formulas for reorder level. One is maximum consumption into maximum time. It's very conservative, absolute foolproof. Whereas there is another formula which is safety stock plus average consumption into average time. This takes some risk, but you will find out that theoretically, in practical purposes, this is a good method. Why? Because business always runs on some risk. So if you go by conservative approach, there is absolutely no risk, but it has some costs involved. You're keeping too much. Safety stock, when you are keeping, you are also covering the risk to some extent, but you are taking some risk. Some part of the risk is still there. So even if there is some extra time it takes to reach the raw material, or sometimes you consume more, you can fall on the safety stock, but maybe sometimes the safety stock may also fall short. So there is some risk in this, but this will be more cost effective. So reorder level, reorder quantity is EOQ, okay, which we have calculated. Reorder level is maximum consumption into maximum time, or safety stock plus average consumption into average time. Average consumption into average time. Then what is the minimum level? So supposing your reorder level is this. So here, let's say at 20 kgs, we are placing an order, and EOQ is, let's say, another 50 kgs. So you placed an order for 50 kgs when the raw material stock was 20 kgs. You have placed the order here, but by the time you receive order, what will you do? You will consume from this only, no? So the reorder level, 20 kgs, you start consuming from this 20 kgs until and unless you receive or replenish your order. By the time you receive your 50 kgs, you consume from this 20. Therefore, your level falls to a minimum level. So the formula for minimum level should be reorder level was where you were, from where you start consuming. So here we assume that you will start consuming at an average level. So average consumption into average time. And supposing at this 20 kgs, you have placed an order for 50 kgs. What will happen when you receive this 50 kgs? 20 plus 50. That's the maximum you can have at any point of time. So what is the maximum level? It is the reorder level plus whatever the quantity you ordered, EOQ. 20 plus 50, 70. So maximum level is reorder level plus reorder quantity, but it will be 50 only when you just placed an order and you received it immediately. But it will not happen, so you will not receive immediately. It's going to take a minimum of 1 day, and in this period also minimum something you will consume. So what should be the formula for maximum level? Reorder level. At 20 we ordered, 50 kgs we ordered, so 20 plus 50, 70. But in this period, we consumed at least half a kg, and it took us at least 1 day. So this has to be deducted from maximum level formula, right? So what is reorder level? Maximum consumption into maximum time. What is the minimum level? Whatever you consume from the reorder level. So reorder level minus average consumption into average time. Here we can assume that we have consumed at average level. And what is the maximum level? Reorder level plus reorder quantity minus minimum consumption into minimum time. You see, if you write the three formulas in alphabetical order in which they will appear in the dictionary, this is what you have, right? Max, min, and minimum reorder level. So in the maximum formula, there are 4 figures that you use: reorder level, reorder quantity, minimum consumption, minimum time. In the minimum level formula, there are 3 figures you use: ROL, reorder level, average consumption, average time. And how do you calculate the reorder level? Only 2 things: maximum consumption right? So this will help you remember what is the formula for 3. And what should you think be the average stock level? One is maximum level plus minimum level divided by 2. But a better formula for this is minimum level plus half ROQ. So at minimum level, you placed an order for 50 kgs. Now 50 kgs is what you place an order for. It will fall to 0 over a period of time with consumption. So on an average, half of the ROQ is what you hold. So on an average, your stock levels would be minimum level plus half ROQ. So these are how the stock charts move. You will have a maximum level. You will have a reorder level. You will have a minimum level. And what will happen is, let's say at a given point of time, here is your stocks. You start consuming from it. The moment it falls at this level, you place an order. And when you've placed an order, you start consuming from this and it falls to the minimum level. And when it reaches the minimum level, you expect to receive your order and you're back to the maximum level. This phase, when you place an order till you receive the order, this is called your lead time. This is the minimum. So once again, from here you start consuming. You fall down. At this level, you place an order. Till the order is received, you consume from this and the level falls to minimum level and then you again replenish generally. So once again, this period is your lead time when you will receive the raw material. These are stock charts. And this is small buffer stock, just in case you expect to receive your material here, but even if you do not receive it here, you have this buffer from which you can consume. Right? Now that you've understood the formulas, let's look at the question. Shriram Enterprises manufactures a special product Z. These are the following particulars collected for the year. Remember, this company manufactures a product Z. So Z becomes your finished goods. But here we are talking about raw materials. So monthly demand for Z is 1,000. That means annual demand would be 12,000. That's okay. That is not what is our consumption. We are going to consume raw material. Maybe one unit require 10 kgs. So we will be using 1,20,000 kgs of raw material. That's what we are interested. We are not interested in the demand for the finished goods. Okay. The second is, what is the cost of placing an order? P is given very clearly. Annual carrying cost per unit per annum. Annual carrying cost per unit. So that's what we were interested in. That's our S or C. Normal usage is 50 units per week. Now, how many weeks are there in a year? 50 into 52. This figure comes out to be 2,600. That's the usage that we are interested in. We are not interested in 12,000. We are interested in 50 units per week and 50 into 52. Our consumption of raw material throughout the year is 2,600 units, kgs or whatever the unit of usage is, raw material is. Which means 2,600 units of raw material will help us manufacture 12,000 units of finished goods. Maybe one unit of raw material gives you roughly around 5 or 6 units. Maximum usage 25, minimum usage 25, maximum usage 75, reorder point 4 to 6 weeks. Right? So this means that reorder here, minimum is given, maximum is given, 25 and 75. So we can always calculate the average, which will lie in between 25 and 75. So 25 plus 75 is 100. 100 divided by 2 is 50. This becomes our average usage. And reorder period is also given, minimum 4, maximum 6. So average reorder period would be, or lead time would be 5 weeks. So in this question, average period or average usage is not given. We have calculated it using the minimum and maximum. If minimum and maximum is not given, you cannot calculate the average. So if average and minimum is given, use that. Do not calculate maximum through using that. Okay. But when minimum and maximum are both given and average is missing, you can calculate the average. However, if in this question average is given as, let's say, 60, then you will not calculate 25 plus 75 divided by 2. You will use average consumption as 60. So from the above data, calculate the reorder quantity, reorder level, maximum level, minimum level, and average stock level. Let's look at the solution now. EOQ will use the formula under root 2 into U into P upon S. So this gives us 2 into 2600, and placing and storage costs were very clearly given. Placing is 100 and storage is 15. So this comes out to be 186.18 units. So this can be rounded up to 186 units. What's the reorder level? Maximum consumption into maximum time. Maximum consumption is 75 units per week, and maximum time is 6 weeks. $450 units. So you will place an order of 186 units when you reach 450 units. What's the maximum level? It's reorder level plus reorder quantity minus minimum consumption into minimum time. 450 plus 186 minus minimum consumption is 25 units per week and minimum time is 4 weeks. So 450 plus 186 minus 100. 536 is the maximum level. What would be the minimum level? Reorder level minus average consumption into average time. Reorder level was 450 units, and in this you've consumed on an average 50 units, and it has taken average time 5 weeks. So 450 minus 250, your minimum level would be 200 units. What would be the average level? I'll use minimum level plus half reorder quantity. So 200 units plus half of 186 units, 200 plus 93. Your average level would be 293 units. Had I used average level as minimum plus maximum divided by 2, 536 plus 200, 736 divided by 2, that would have given me 768 divided by 2. So 736 plus 200 divided by 2. 736 divided by 2 is 368. Your answers would be different using the two methods for average level. So in this method, you get 293. Otherwise, you would have got alternatively 368 units. Both are correct. You can follow this preferably. In reorder level also, if I had used safety stock plus average consumption into average time, my answer would have been different, right? So we have calculated reorder quantity, which is 186 units. Reorder level, maximum consumption into maximum time, 75 into 6, 450. Minimum level, reorder level minus average consumption into average time, 450 minus 50 into 5, 250. So 200. And maximum level, reorder level plus reorder quantity minus minimum consumption into minimum time. And average was 293 or 368. We also have one more level, which is called danger level. So it might be said like that, though the lead time is like 4 to 6 weeks, but if there is an extreme emergency, you may also get it in like, let's say 2 weeks. So danger level is average consumption into emergency lead time. Your average consumption was 50 units per week, and the emergency time is 2 weeks. So if your level falls to 100, that becomes a danger level. Now, I told you that reorder level can also be safety stock plus average consumption into average time. And I told you that this method is better. Now, this will help you solve illustration 7 from your study material. The following information is available in respect of a particular item of inventory of a manufacturing firm. Your usage can be 2 tons, 3 tons, or 4 tons, and it has a probability of 0.2, 0.6, or 0.2. So we can calculate what is your average consumption or expected value of your consumption from these figures. Your average consumption is given by, if you remember your statistics in quantitative aptitude foundation, summation XIPI. So it is 2 into 0.2 plus 3 into 0.6 plus 4 into 0.2. Three tons comes out to be the average consumption. Similarly, average time 25 into 0.2 plus 35 into 0.5 and 45 into 0.3. We got this as 3 tons because 2 and 4 are exactly 0.2, 0.2. But here 0.2 and 0.3. So you might get a different answer than 35 days. 25 into 0.2 is 5 plus 17.5 plus 13.5. 36 days is your average lead time. So average consumption into average time becomes 3 into 36. 108. To this, we will add some safety stock. What should be the safety stock? So that's the question. Find out the optimum level of safety stock. Now let's create some scenarios. What is the possibility that your daily usage could be 2 tons? And it can take 25 days, it can take 35 days, and it can take 45 days for you to receive this material which you order. 2 tons is consumption, and if it takes 25 days, your consumption would be 50. But you already are ordering at 108 plus something. So you are safe, no problem. 2 into 35, your consumption in the lead time would be 70. Absolutely safe because 108 is the minimum reorder level plus some safety stock. So 108 will easily last this 70. 2 into 45, 90. 90 is again less than 108, which means you are still safe. Another scenario, 3 tons, 25, 35, or 45. So we calculate all possible scenarios. 3 tons consumption and 25 days lead time. 75. You multiply the two. 75 is well below 108, so it's still safe. 3 into 35, 105. Just about. You are safe still. 3 into 45. Here comes the trouble. So if you consume 3 tons daily and if it takes 45 days, your consumption would be 135. Whereas if you do not have any safety stock, you ordered at 108. That means you will have a stock out situation here. By how much? The stock out situation would be by 135 minus 108. So you are going to be stock out by 27 units. I hope this is clear. What is the third possible scenario from consumption point of view? 4 tons. And if it takes 25 days, what's your total consumption? 100. Still safe, no problem. But if it takes 35 days, that's a problem. 140. How many units you ordered? 108. If the safety stock is 0, okay? If the safety stock is 0, you had placed an order at 108, you consume 140 in this scenario, so you are stock out by 32 units. And if it is 45 days, oh my God, it's 180. It took maximum consumption and maximum time, so you are short by 72 units. But we see that there are only 3 scenarios in which you will be stock out. If you consume 3 tons every day and it takes 45 days, or if you consume 4 tons and it takes 35 days or 45 days. So these are the 3 possible scenarios of stock out. And had you kept a safety stock of 27, this would also have been covered. You would not have been stock out here also. And here you would have been stock out by only 5 units. And here you would have been stock out by 45 units, right? If you had kept a safety stock of 32, you would not have been stock out here also. You would not have been stock out here also. You would have been stock out on only this scenario with 40 units. Okay. So let's calculate all this. I have explained here. You will be able to understand. And probabilities will also be relevant. 0.2, 0.6, 0.2, 0.2, 0.5, and 0.3. Let's see how we do it. So this is how your scenario analysis goes. 2, 3, 4 with a probability of 0.2, 0.5, and 0.6, sorry, and 0.2. Lead time could be 25, 35, 45 in all the 3 scenarios. Probability of 0.2, 0.5, and 0.3. Remember, the totals of probability should always match as to 1. So your consumption would be 50, 70, 90, 75, 105, 135, 100, 35 into 4, 140, and 180, And you will also calculate the joint probability. 0.2 into 0.2, 0.04, 0.010, 0.06, 0.18, 0.30, 0.6 into 0.5, 0.6 into 0.3, once again 0.18. This is 0.6 into 0.2, 0.12. 0.2 into 0.2, 0.04, 0.2 into 0.5, 0.10, and 0.2 into 0.3, 0.06. When you will add this, 4 plus 10, 14, plus 6, 20, plus 12, 32, plus 30, 62, plus 18, 80, plus 4, 84, 94, and 100. So the total should come out to be 1. So let's say we keep zero safety stock. If we keep zero safety stock, there are 3 stock out situations when the consumption is 135, 140, and 180. Here you are stock out by 27 units, 32 units, and 72 units. The joint probability of this scenario is 0.18, 0.10, and 0.06. So expected stock out unit will be 27 into 0.18. Okay. It's 4.86. 32 into 0.10, 3.20, and 72 into 0.06, 4.32. So the total expected stock out would be 12.38 units. Now, if I prepare for this scenario and I keep 27 units at stock out, I'll be stock out in only these 2 scenarios. And out of 32, 27 units are provided. And you can see the reorder level. If I keep a safety stock of 27, 27 plus 108, 135. So if the consumption goes to 140, I'm stock out by 5. If the consumption goes to 180, I'm stock out by 45 with a probability of 0.10 and 0.06. So the expected stock out unit will be 0.5, 5 into 0.10, and 45 into 0.6. 0.06 is 2.7. So the total stock out unit would be 3.2 units only. Now, if I prepare myself for this scenario also, and I keep a safety stock of 32. So 32 plus 108 is 140. I'm stock out in only 180 scenario with 40 units, which has a probability of 0.06, and 40 into 0.06 is only 2.4. So I'm going to be stock out by only 2.4 units. And if I prepare for this scenario also, and I keep a stock of 72 units as safety stock, then it's again maximum consumption into maximum time. There is no scenario in which I'm stock out. So no stock out, but I'll keep a storing cost of 72 units. Now the question says, what is the probability of stock out given that carrying cost is 2,000 per ton and stock out cost is 8,000 per ton? So this 12.38 will cost me 12.38 into 8,000. This will cost me 3.2 into 8,000, so on. 12.8, 12.38, into 8,000. The stock out cost is 99,040. Storing cost is nil. I'm not keeping any stocks. So the total cost is 99040. In this scenario, it is 3.2 into 8,000. So it is 25,600. But I'm also keeping a stock of 27 units, and 27 into 2,000, that will cost me 54,000. 54,000 plus 25,600. The total cost comes out to be 79,600. If I'm on a safety stock of 32 units, 2.4 into 8,000. Stock out cost is 19,200, but keeping a stock of 32 units and 2,000 per ton. So 32 into 2,000, 64,000. 64,000 plus 19,200, 83,800. And 72, the stock out cost is nil, but 72 into 2,000, 1,44,000. So the total of stock out cost and storing cost is 144,000. Which one is the least? So what should be the right decision? To keep our of 7 units. So our safe stock should be 27 units. And we are that way taking a risk of 16%. We are okay with a self situation when we are having 140 units or 180 units consumption, which is a probability of 0.10 and 0.06. So we are taking %16 risk. Had we taken a safety stock of 32 units, we would have taken only 6% risk, only one situation. And in 72, 0% risk. And in this, 16 and 18, 34% risk. So we have to strike a balance between how much risk we can assume and what cost it entails. So let's be ready to take a 16% risk. That will be most cost effective for us. Right? So this is how you calculate what should be the optimum safety stock. So optimum safety stock in this scenario is 27. You have a similar question in your study material, illustration 7. Try to do that. I think it will not pose any problem. Right? Any questions regarding whatever we have discussed so far? Please quickly, you can type it in the chat window. I'll quickly explain this. You have different scenarios of usage and lead time with probabilities. So first we'll use ICAI to calculate the average consumption and average time, which gives us 3 into 36,108. Now our situation is what should be the safety stock? So if zero safety stock, reorder level becomes 108. But is it right to have zero safety stock? So we calculated various scenarios, all possibilities with the joint probability. And we saw that in 108, we would have been stock out in 3 situations. And the total risk we are taking is 0.18 plus 0.10 plus 0.06, which is 34% risk, which is quite high. So if we want to cover this situation, we can keep a safety stock of 27. In that scenario, we'll be stock out with only 140 and 180 with 5 and 45 units. Expected value of stock out would be 5 units with a probability of 0.10 is 0.5. 45 units with a probability of 0.06 is 2.7. So your expected stock out unit is 3.2. Cost of stock out is 8,000 per ton. So 3.2 into 8,000. And carrying cost is 27 into 2,000. So the total cost comes out to be this. If you want to cover this situation also, you must keep a safety stock of 32. So 32 plus 108, 140. Then you are going to be stock out in only one situation if the consumption goes to 180. With how many units? 40 units. With a probability of 0.06. 40 into 0.06, 2.4. 2.4 is your expected stock out unit with 8,000 per unit cost of stock out. Stock out cost is 8,000 per ton and carrying cost is 2,000. So 8,000 into 2.4 plus 32 into 2,000, that's more than 79,600 together. So we keep our safety stock of only 27. And we take 16%. I can give you a 2 minutes break here and then we can start with the employee cost. In case you have any questions, you may please ask regarding material. Okay. In material, what next that we do is we have covered EOQ pre-order levels. That's about how to order, when to order, how much to order. This is a question which I'll explain, which is regarding pricing of receipts. Following details are available in respect of cost consignment of 1250 kgs of material Z. Invoice price is 20 per kg. So your cost would be 1250 into 20. But if you have any trade discounts, you should subtract it. 10% is the trade discount on invoice price. So it will not cost us 20, it will cost us 18. So our total raw material cost so far would be 1250 into 18. Then you will have excise duty, which is 25% on net invoice price. So 25% of 18 would be 4.5. This will become your excise duty. Another sales tax 8% of net invoice price, including excise duty. So you will have sales tax at 8% of 22.50. So in pricing of receipts, we take the raw material cost, add to it any duties or taxes which are paid, but subtract, do not include trade discounts. However, if these duties or taxes were available as credit, like you get a GST input tax credit, in that case, you will not add it. But if you are not getting any credit, then this becomes part of your cost. Insurance is also there as 1% on net invoice price. So 1250 into 1% of 18, so it becomes 0.18. Insurance costs will also be added. Delivery charges are given absolute. So whatever this figure comes out, to this you will add plus 250 as delivery charges. Cost of containers is rupees 60 per container of 50 kg. So you will calculate how many containers you will need. 1250 is the raw material, 50 kgs per container. So this becomes 25 containers. And 25 into 60 is the container cost. But you get a rebate 40 per container if you return it within 6 weeks. And this is the normal feature. So out of 60, 40 you will get refund. So the containers are going to cost you only 20. One container was rejected on inspection, not accepted. So this means ultimately 1200 kgs of raw material is only that we have accepted. So number of containers would then be 24 into 20. And cost of unloading and handling is 0.25 per kg of the containers or material ultimately accepted. So we will add to this the containers cost, which is 24 into 20. And plus we will add to this the loading and unloading at 1200 into 0.25. This will not be calculated at 1250. It will be calculated at 1200 only. So this is the ultimate containers you have accepted, you are required to find out the landed cost per kg of material C. So here also, out of this one container not accepted, but we have to bear the cost of 250 on 1200 kgs only then. So this will be your receipts and this will be your cost per kg of the raw material which you have ultimately received. And another question that comes in material is how do you price your issues, pricing of issues. We talked of pricing of receipts and pricing of issues. So here you can follow a perpetual inventory system or periodic. So in perpetual, you can follow different methods based on cost, FIFO, LIFO, weighted average, simple average. But FIFO and weighted average are more prominently followed. What will happen in this is you have different receipts. Let's say on 1st January, 300 units at the rate of 8.5, 400 at the rate of 8, 500 at the rate of 6, 400 at the rate of 5.5 on 1, 10, 15, and 28 January. So on these dates, 1, 10, 15, and 28 January, you will write how much you have received. 300, 400, 500 kgs and 300 kgs. 400. Price 8.5, 8, 6, and 5.5. So this is your receipts, 300 into 8.5. What are the issues? The issues are on 2nd, 11, 18, and 28. So this is the whole question. How much, at what rate will you say the 100 units is priced at for issues? So you look at the balance. What do you have in balance? 300 into 8.5. That's all you have. So under FIFO, the 100 units will be issued at the rate of 8.5 only. What will be the balance? 200 would be the balance at the rate of 8.5. Then what happens? You receive another 400. So on this date, the balance is 200 at the rate of 8.5 and 400 at the rate of 8. Under FIFO, these 500 units, first these 200 will go and then anything will go from here. So 200 will go at the rate of 8.5 and remaining 300 will be issued from the 400 lot. So out of this 400, 300 has gone. This 200 is completely gone. What will remain is 100 into 8. Then you again have a receipt of 500 at the rate of 6. So on this date, you will have 100 into 8 and 500 into 6. $400 units, which will go? These 100 will go first and remaining 300 will go from the 500 lot. So 100 into 8 have now gone and 300 into 6 will go. So what will remain is 200 will remain at the rate of 6. Then you again have received 400 at the rate of 5. So on this date, you will have 200 units at the rate of 6 and 400 at the rate of 5.5. So the 300 units that you will consume is 200 at the rate of 6 and the remaining 100 will go from the 5.5 rate lot. What will remain is 300 at the rate of 5.5. Your closing stock would be at 1650. This is FIFO. Had it been weighted average, you will not keep them segregated, you will merge them. You will say 600 kgs. Total costing 4900. And when 4900 will be divided by 600, you will establish a rate, and entire 500 units will be issued at that rate. So for example, here it comes out to be 4900 divided by 600. The rate comes out to be 8.166. So the entire 500 units would be issued at the rate of 8.166. And we will say that out of 600, 500 at the rate of 8.166 are issued, and 100 at the rate of 8.166 remains. So here the balance would be 816.67. Then 100 into 800, 8.16 plus 3000, another 600 units at 38.16. Okay. These are how you calculate the pricing of issues. FIFO method, weighted average, perpetual, or periodic. In periodic, we will not fill the rate now. We will fill it only after a particular period is over. Let's say the month of January. So we'll not fill it up simultaneously. We'll fill only after 31st January. Right? So this was about material, as much as I could explain within this revision for this period. Now we'll talk about employees cost, that is labor. I'll again explain everything using questions here. So first concept is the labor turnover concept. What do we understand by labor turnover? Turnover in inventory is something good, but turnover in labor is not good. This means your employees are continuously leaving the organization and joining back. So that should not happen. The rate of change of labor turnover in a company during the year ending 31st March 2013 was calculated as 13, 8, and 5% under flux, replacement, and separation method. Now, what is labor turnover? It is calculated using three methods. First is separation method. Second is replacement method. And the third is flux. So under the separation method, we calculate how many workers left the organization, or they were discharged, or they resigned, or they were terminated, or someone had an accident, or there was a death of some employee. So whatever reason the employee has left the organization, divide by average number of employees in that period. Average means opening plus closing divided by 2. Into 100, this will give you a percentage. So here, like you can see, 13% is flux, 8% is replacement, and 5% is separation. So 5% is the answer for labor turnover using separation method. And it is also saying how many workers separated during the year, that's 40. So if you will calculate this, 40 divide by average number of workers into 100 gives you 5%. Okay, so this gives you 5. So when you will solve this, what you will have, average number of workers will be 4000 divided by 5. And you will find out how many average number of workers are there in the organization. So average is 4,000 divided by 5, 8,000 number of average employees. How do you calculate the replacement? So these are the number of workers who have been discharged or left or terminated, resigned or died. Against these 40 number of workers, how many new workers were required? New workers replacing those who have separated. If you have new workers because of expansion, you don't count that, remember. So new workers replacing the ones who've separated, divide by again average number of workers into 100. So how many workers would have replaced? Here we know that replaced is 8%. This time we don't know how many workers have replaced, but we know the average 8,000. So how do you get the 8%? 8% of 8,000 would be 64. So that means 40 workers left the organization and 64 workers out of this were replaced. Okay. Sorry, this is 800. So on an average, there were 800 number of workers in the organization. Right? So 8% workers out of 800, that means 64 workers were replaced. Flux is new workers due to replacement, plus also any new accretions, like maybe because of expansion or new unit, etc. Plus separation. So flux is a combination of replacement plus separation, but also any new accretions due to expansion. So flux is 13%. We don't know how many numbers of new replacement plus new accretions plus separations divided by 800. This comes out to be 13% of 800. 104. And we have already seen 40 separated, 64 replaced, plus new accretions. But the total is 104. That means new accretions due to expansion is 0. Right? So first question is how many average number of workers on roll? We calculated it, 800. How many workers replaced during the year? 64. Number of new accessions or new recruitments apart from those replaced? 0. How many number of workers were there at the beginning of the year? So let's say there were X number of workers at the beginning of the year. From X, 40 workers left the organization, separated. 64 were replaced. So this will become your closing number of workers. Which is equal to X plus 24. Now, how do you calculate the average? Average is opening plus closing divided by 2. So 2x plus 24 divided by 2 is 800. 1600 will be equal to, when you solve this equation, 1600 will be equal to 2x plus 24. 1576 will be equal to 2x. And 1576 divided by 2. X is 788. So how many number of workers were there at the beginning of the year? That is 788. You can also do this one calculation. You can see the change as 24. So to find out the opening workers, 800 minus half of 24. You will get 788. And to find out the closing, 800 plus half of 24. So closing workers were 812. You can verify your answer from 788 when 40 workers left. Your number of workers are 748. And then when another 64 are added to this, the closing workers are 812. Okay. So I'll revise again. Labor turnover is calculated using three methods: turnover, using separation, replacement, and flux. Separation is how many number of workers left during the period divided by average number of workers in 200. Replacement is how many new workers against those who have separated have been joining the organization divided by average number of workers. Flux is combination of separation plus replacement, plus also if there is any new accession because of some expansion or other reasons. So that divided by average number of workers. Now here, as we could have seen that 13% is equal to 8 plus 15%, 8 plus 5%. This was evident enough to help us understand that in this case, there is no new accession because of expansion or any other reason. Had this been 15%, then I would have said that 2% is accession because of expansion or other reasons, or new accessions, new recruits. Another type of question that you get on labor turnover is how much is your loss because of the turnover? So you are aware of the concepts of contribution in your costing, marginal costing. Contribution is selling price minus variable cost. And contribution percentage is contribution divided by sales price into 100. This may also be called as PV ratio, profit volume ratio. This is that part of your sales which contributes towards recovering fixed cost. And then if fixed cost is completely recovered, it gives you profit. Or if fixed cost is not recovered, at least it will help you in reducing your loss. If you sell one extra unit, the PV ratio or the percentage in contribution percentage in that sales will either increase your profit or reduce your loss. So what has happened here is the management of Sunshine Limited wants to have an idea of how much was the profit lost or forgone as a result of the labor turnover last year. Now, last year's sales was rupees 66 lakh, and it had a PV ratio of 20%. The total number of hours the workers have worked is 3.45 lakh hours. But there were delay by the personnel department in filling vacancies due to labor turnover. So labor left and the personnel department got a little delayed in filling these vacancies, because of which 75,000 potentially productive hours were lost. So had this not been lost, another 75,000 hours would have been worked, and maybe you would have worked 420,000 hours. 420 lakh hours. So the actual direct labor hours included, now 345 includes a 30,000 hours where the workers were training. And in this training period, they were only 50% effective and they were 50% unproductive. So this 30,000 hours, which is included in 3.45, should be counted as only 15,000 hours. So technically, out of this 345, 15,000 should be subtracted. So truly speaking, you have worked for only 315 plus 15, 3,30,000 hours. So sales achieved per hour is 66 lakh divided by 3,30,000 hours, 20 rupee per hour. So for every hour you have worked, you have generated a sales of 20 rupee per hour. And with a 20% PV ratio, you have generated a contribution of 4 rupee per hour. So if not worked for 75,000 hours, 75,000 into 4, 3 lakh rupees is your clear-cut law. Okay. So 66 lakh was your sales, 3,45,000 hours you worked, out of which 30,000 hours were half productive. So 15,000 unproductive lost. So you worked only for 3,30,000 hours. And in that 3,30,000 hours, you've generated a sales of 66 lakh, which means you generate a sale of 20 rupee per hour. And with the 20% PV ratio, 20% of 20 is 4 rupee. So effectively, by losing 75,000 hours, 75,000 into 4, 3 lakh rupees profit is foregone. The cost incurred consequent on labor turnover revealed on analysis the following. So when the worker leaves, it's not just the cost of hiring new workers and incurring the cost because of the sales foregone and thereby the profit foregone during that period when you were not able to have workforce. But you also have to give compensation and settlement charges, etc., to these workers. You have to recruit new workers. You have to train them. You have to induct them. All this also involves a lot of cost. So settlement due to leaving is another cost. Recruitment is another cost. Selection is another cost. Training is another cost. So to these 3 lakh, you will add all these 4 costs as well. And that's the total profit lost or foregone. We'll assume that the potential production lost due to labor turnover would have been sold at prevailing price. So see, if these 75,000 hours would have been sold, you would have generated another 75,000 into 20. That means 15 lakh rupees sale and a 20% on 15 lakh, 3 lakh rupees profit is foregone, apart from these extra costs. One assumption I have made in this question, which you may put it as a footnote in the exam. These 15,000 unproductive training hours are included in 75,000. Otherwise, it would be 75,000 plus 15,000, 90,000 into 4, 3,60,000 plus these extra costs. So question is not mentioning. It's saying filling vacancies due to productive labor turnover, 75,000 potentially productive hours were lost. So 75,000 potentially productive hours lost is total, or apart from training hours being unproductive. So you can make an assumption. If you find it as part of the 75,000 hours, then you will take your answer 3 lakh plus 27,420 plus 18,725 plus 12,750 and 16,105. But if you find them separate, then 3,60,000 plus all these 4 figures. So this was about labor turnover. Another interesting question that you get in labor employee cost is, how do you calculate the earnings of the workers? And how do you allocate it against various jobs? What is it that you calculate? So before I start with this, I'll need to tell you one law which is as per Factories Act, that the workers need to be paid at double the rate for overtime. And when they are being paid at double the rate for overtime, the overtime is calculated as any time beyond 9 hours in a day. is considered overtime. And a total of 48 hours is normal. Beyond 48 hours in a week is again overtime. Now, if I'm working 6 days a week and 9 hours every day, I work 54 hours. So as per day, I've never done any overtime. But as per 48 hours week, I have done 6 hours overtime. So this will be counted as overtime. So whichever is more beneficial. So if I'm working 12 hours on 3 days, I'm working 36 hours, which does not cross 48 hours, but it crosses 9 hours each day. So 3 hours per day, 9 hours would be considered as.
Is it clear? Now, when you calculate the earnings of workers A and B from the following for a month and allocate the earnings of each to job X, Y, and Z, basic wages are 10,000, 16,000. Dearness allowance is 50%, 50%. Provident funds on basic wages is 8%, 8%. And employee state insurance on basic wages is 2% and 2%. Only worker A has given you the overtime for 10 hours. Okay. So when worker A has given you the overtime for 10 hours, and there are normal 200 working hours for the month, overtime is paid at the double rate, which is normal rate plus DA. So DA is part of salary for overtime. So here the DA is 5,000. Here the DA is 8,000. But he's not doing any overtime. So the dearness will be calculated at the rate of 5,000 for worker A. Provident fund is 8%. 8% on 10,000 is 800. And 2% on 10,000 is 200. So this worker has got a salary of 10,000 plus 5,000, 15,000 plus 1,000, 16,000. Plus it has worked overtime 10 hours. Employee state contribution and ESI and Provident Fund are equal rate with the employee's contribution. So employer is also contributing and employee is also contributing. And these workers are employed on jobs XYZ in the following proportion with overtime on job Y only. So two things are here. Overtime is done only by worker A and it is done only on job Y. So when you will calculate the overtime for worker A for 10 hours, first we have to see that it is double the rate as per normal rate plus DA. So how much is he getting? Normal plus DA. He's getting 15,000, 10,000 plus 5,000. And he's getting it for how many hours? 200 hours. So this establishes his per hour rate, which comes out to be 75 rupee per hour. And the double rate for overtime will then be 75 into 2. It is 150 rupee per hour. And as he has done it for 10 hours, he will be paid 150 into 10, 1,500 rupees for the overtime. Okay. So far clear? There are two workers, A and B. Both are getting 10,000 and 16,000. Both are getting DA 50%, PF 8%, ESI 2%. And only worker A has done an overtime for 10 hours, which will be paid at double the normal rate. And normal rate will be calculated using wages plus DA. So normal rate is calculated for 200 hours. 15,000 divided by 200. 75 rupee per hour is the normal rate. but at double the rate of normal hours, the overtime will be paid at 150 rupee per hour. In 10 hours, that means he will be earning 150 into 10, 1500. So let's do the calculation. We have to calculate the earnings of worker A and B from the following for a month and allocate it to jobs X, Y, and Z. Worker A, worker B, 10,000, 16,000, DA 50%, PF 8%, ESI 2%, overtime 1,500. These are the total earnings of worker A and B. Now we also need to allocate it to job X, Y, and Z. A gives 40, 30, 30. But we will take it as not 17,500. We will take it as first without overtime. So A normal amount is 16,000. 40% goes to X, that is 6,400. 30% goes to Y, and 30% goes to Z. 40, 30, 30. Overtime 1,500 goes only to Y. For worker B, total 25,600. $50, $20, $30. $50, $20, and $30. Let's check the calculations. So what is the cost of job X? It's 19,200. What is the cost of job Y? Add all three. 10,000, 11,300, 11,420. So we've calculated the earnings of worker A and B as well as the cost of jobs X, Y, Z on which the workers A and B have allocated their efforts. Next is how the workers should be rewarded. Okay, so when we talk about rewarding the workers, there are two methods broadly. One is time-based payment. And the second is piece rate. When you have time-based payment, what you do is you see how many hours the worker has logged in or how many hours he has worked in the organization. And basis that you multiply it by hourly rate, and that is what the worker gets. Now, the benefit of this is this always guarantees the worker that if he's present, he will be getting this much of money. But the problem is that if there are two workers, worker A and B, they both spend 8 hours each. Whereas worker A gives you an output of, let's say, 1,000 units in 8 hours, and worker B gives only 200 hours. He's talking around with people, sitting idle, wasting time, not doing work efficiently, and not being very honestly and with loyalty. They both end up getting, let's say hourly rate is 100, they both end up getting 800. So what happens is worker A over a period of time might get frustrated. He might stop working hard. He may be losing his motivation and he'll not put as much efforts as he used to. So the better way is that you reward the workers you giving time, piece rate. So if the piece rate is, let's say, 1 rupee or 50 paise, 20 paisa per piece, automatically what will happen? Worker A here will get 1,000 into 20 paisa, let's say 200 rupees in a day. And what the worker B will get is only 200 into 20 paisa, that is only 40 rupees. So this will motivate worker B that if he really wants to work hard, earn something, he has to work hard. But the problem with piece rate is that worker is so interested in churning out pieces, making a lot of output. He's not worried about the quality. He's not worried about whether they are defective or what. So it's just, he knows that the machines need rest in between. So you have to give them a 2 minutes break after every 1 hour. But he doesn't do that. He doesn't bother about whether the machines are being damaged or what is happening. He simply gives you the output. So both the methods have their advantages and disadvantages. And therefore we say
we should now be having a method where combination is used and the workers get some incentives also. So either use some combination or give some incentive to the workers so that they're motivated to work hard, whether they're based on time-based or piece rate. So some incentives are based on time-based, some incentives are calculated basis piece rate. So time-based incentive, two major theories or the people that have come up with time-based incentives is, one is the Halsey plan and the second is the Rowan plan. Halsey suggested that the workers should be given time rate, but if they are very efficient and they save, time rate should be guaranteed. But they should also be given some incentive in the form of bonus. And what would be bonus? So bonus would be whatever the time they save because of their efficiency. So time saved into hourly rate is what they have saved the money to the management. Half of it should go to workers. So time rate is guaranteed, plus they'll get a bonus of 50% of the time saved into hourly rate. There's a company, a Ware company, which followed Halsey plan. So we call it Halsey Ware plan. They followed him, but they gave 30% bonus. So in Halsey Ware plan, if we have to give a bonus, we don't give 50% or 1/2, we give 30%. Rowan also suggested the same thing. Let's give them time rate, guaranteed, plus a bonus. But bonus would be what? Bonus would be proportion to how much time does he save as compared to standard time to do a job, multiplied by actual time into hourly rate. So Rowan also followed the same plan. He gave bonus on basis time saved, but he gave a percentage of actual wages that the worker has earned in proportion to the time saved compared to the standard time. So let's look at this question and you'll understand. Calculate the earnings of the worker under Halsey plan and Rogan plan. The hourly rate of the workers are 50 paisa per hour. And the standard time for producing 1 dozen article is 3 hours. 1 dozen is 12 articles, right? Now you produce 20 dozen. So 1 dozen takes 3 hours. So 20 dozen should take direct proportion 60 hours. So 60 hours becomes the standard time to do the job or standard hours, whereas they have done the work in 48 hours. So actual time taken is 48 hours. Therefore, time saved is standard time minus actual time, or standard hours minus actual hours. Twelve hours. So what did Halsey suggested? Let us give the workers their hourly rate, plus let's give them a bonus, which is 50% or half of time saved into hourly rate. So let him get 48 hours into 50 paisa, plus a bonus of 12 hours into 50 paisa. So he gets 24 plus 3. What does Rowan give? Once again, actual time into hourly rate plus time saved divided by standard hours multiplied by actual time, actual hours into hourly rate. So as per Rowan also you'll get 48 into 50 paisa plus time saved is 12 hours on 60 hours. So 20% of the wages he will get extra. 24 plus 20% of 24, 4.8. He ends up getting 28.80. So you see, Rowan gives more incentive as compared to Halsey. But this will happen only as long as the time saved is 50%. Look at the same question. If the standard hours were 60, actual hours were 30. So time saved would have been 30. What would have Halsey given? 30 into 0.5 plus half of time saved. 30 into 0.5. What would have Rowan given? 30 into 0.5 plus time saved 30, standard hours 60 into actual hours into hourly rate. So you get the same equation, only instead of 30 by 60, it's written 1 by 2, which is one and the same thing. So they both would have given 15 plus half of 15, 7.5, 22.5. Right? So Rowan and Halsey gives you exactly the same answer when the time saved is exactly equal to actual hours. Just look at the situation. If standard hours were 60, actual hours were 20, and time saved was 40. Now, Halsey would have given 20 into 0.5 that is 10, plus half of 40 into 0.5, another 10. What would row 1 give? 20 into 0.5, that is 10, plus time saved 40, standard time 60. So instead of half, this becomes 2 by 3. But 2 by 3 of what? 2 by 3 of just actual hours into hourly rate. 2 by 3 of 10, which is 6.67. So row 1 gives 16.67. Now Halsey gives more. So row 1 gives more as long as the time saved is not 50% of the standard time. 22.5. Okay, good. So row 1 gives more than Halsey if time saved is not half of time at standard time. Halsey gives, they give equal. When time saved is equal to half the standard hours. But row 1 gives less than Halsey when time saved is more than half the standard hours. Right? Why? Because Halsey gives you the bonus on time saved, whereas the row 1 applies the bonus on actual time. So even if time saved is more, the bonus applicable on actual time becomes less. One interesting question, there are two workers A and B, we produce the same product using the same material. Wage rate is also same. A is paid as per row 1. B is paid as per Halsey. Time allowed to make the product is 50 hours. A takes 30 hours. B takes 40 hours. Time saved in case of A is 20. In case of B is 10. Factory overhead rate is 5 rupee per hour. 5 rupee per hour on actual hours. The factory cost of product manufacturing is 34.90 for A and 3600 for B. Compute the normal rate of wages. Normal rate is not paid. What is given is factory cost. Factory cost comprises of material, labor, and overheads. Material we don't know. Wages also we don't know the wage rate. So let's say Y. So what would A get as per row 1 plan? He will get 30Y plus bonus. Bonus would be 20 by 50 of 30Y. That means 40% of 30Y. That is 12Y. So wages will be 30Y plus 12Y, 42Y. What will Halsey get? 40Y, hourly rate, actual wages, actual hours into hourly rate, plus half of time saved, 10 hours, into hourly rate, Y. So he gets 40Y plus half of 10Y, 45Y. This gives us an equation. Here the overheads are 150, here the overheads are 200. So we get an equation X plus 42Y plus 150 for A. For B, x plus 45y plus 200, and this is equal to 3600. You can solve the two equations. You can rewrite it as x plus 42y is equal to 3340 and x plus 45y is equal to 3400. When you will subtract the two equations, you will get minus 3y is equal to minus 60. Y is equal to 20 rupee per hour. So the wage rate comes out to be y is equal to 20 or 20 rupee per hour, right? Another important question, interesting question. A skilled worker in XYZ is paid guaranteed wage rate of 30 per hour. Standard time per unit is 4. P is a machine man. He was paid under the Rowan plan. And he got an effective wage rate of 37.57. Hourly rate is 30. So what do you think, in how many hours did he do the job? That's the question. So let's say again X. Hourly rate is 30. So 30x plus he must have got some bonus. How much? 4 minus x is the time saved. Divide by 4 standard time into 30x. This is the bonus. This is his total wages. And this, when divided by x, becomes his hourly wages, which is equal to 37.50. So when you're going to solve this equation, you will find out the solution. So when I take this x here, it becomes 30x plus 4 minus x upon 4 into 30x is equal to 37.5x. You will divide the whole equation by x. It will become simplified. 30 plus 4 minus x upon 4 multiplied by 30. This x will cancel. Will give you 37.5. So 4 minus x upon 30 by 4, I can write it as 7.5 is equal to, this 30 moves there on the right side, 7.5. 4 minus x is equal to 7.5 divided by 7.5 is 1. 4 minus 1 is equal to x. So x is equal to 3. So he has done the work in 3 hours. Now that he has done the work in 3 hours, can you calculate his effective rate under Halsey? So under Halsey, he would have got 3 into 30 plus half of 1 into 30. He would have got 90 plus 15, 105. 105 and divide by 3. His effective hourly rate would have been 35 rupee per hour. So as you can see, actual time is 1, saved is only 1, standard is 4, it's less than 50%. So hourly rates under Rowan is higher, 37.5. Rowan rewards more. Okay, so this was about Halsey and Rowan plan. If you have any questions, you can ask. That's all I could revise for you for material and labor. Okay. Let me. Illustration 8 is something you were asking me, right? This was the illustration 7 I was talking about. So you can see stock out of tires, how many times out of 100? Stock out of tires 100, 2 times. So the risk is 2%. You will be stock out by 80, 5 times. So 5%. So if you prepare yourself to be stock out by tires by 180, you're taking 7% risk. So let's keep a safety stock of 100. It means 0 times stock out, okay, with a probability of 0.33 that must be given here. Stock out of tire 0, that's 33% probability. Stock out cost would be 0, but you will keep an inventory of 100. So 100 into whatever the cost, 55,000. If you keep an inventory of 80, you are stock out by only this situation by 20 units with a probability of 0.02. Okay. So this is how the same question has been done. If you keep 50, you are stock out in 2 situations, in the situation of 180 with a probability of 0.02 and 0.05. So that's 7% risk. Illustration 8. From the details below, draw the ABC. Yeah, we have one more method in which we do the inventory control, which are called ABC analysis or VED or FSN. When you say FSN, it's fast, slow, or non-moving items. When you say VED, it is vital, essential, or desirable items. Similarly, you have the ABC where you classify your raw material into A category is high in value and less in number of units. Like in your house, you keep most preciously your jewelry. So it occupies very small space, but it is highest in value. So you take utmost care of jewelry, right? Similarly, in the organization, this organization uses 12 different types of raw material, 7,000 units of this, 24,000 of this, 1,500 of this, so on. And what is the unit cost? So you can find out what is the value of each of the 12 units, different items, 7,000 into 5, 24,000 into 3, 1,500 into 10, 600 into 22, 38,000 into 1.5, so on. You will see that 24,000 is too much in number of units. Value is less. 60,000. Just see 60,000 into 0.2. Value is just 12,000, but occupying a large space. So if we focus EOQ, reorder levels on those items which is more in value, you will be able to focus on those areas which really impact your uh, costs highly. So how do we segregate the items into ABC? First, write down the units and take the total of the units. So the total of the units is 2,19,000. Now express 7,000 divided by 219 and find out how much percentage it is. 3%. 24,000 on 2,19,000. 10%. So find out the percentage of units of all. Though this is 100, it's not relevant really because we'll classify basis value. But it gives me some idea that this should give me a C category. This could also give me a C category or maybe a B. This is C, this is C. So item number 5, 6, and 7 should be generally a C category for me. And if I look at the number of items which are very less, like 1.39, this could be category 1. Item number 9 should certainly be category 1, but I'm not sure because we'll go by value basis. So then you multiply 7,000 into 5, 24,000 into 3, and then you have the total value of all the 12 items and you take the total. And just as you have calculated the percentage of all items in terms of units, here also you'll do the same thing. 35,000 divided by 3,55,770 into 100. So now you classify the percentage of all. Okay. Now you look at these values. So 20 is very high. 20 is my first rank. Then I get another 22. So 22 is the first rank. Then 20 is the second rank. So you give the ranks to these. After 20, 16. This is the third rank. After 16, 9,000. This is the fourth rank. After 9, 5. Okay, 7. This is the 5th rank. This is the 6th rank, so on. So I've given the rank to all the 12 items basis value. Now I'll add up rank 1. 22. This goes to A plus 20. 42. This also goes to A. So somewhere around 55-60% I'll add, and I'll classify those items as A. So 50 to 60%, 70% is A. 15% is B, 15-20% around, and remaining is C. So when I add up rank 1 and rank 2, I'm 43% roughly. Then when I add up rank 3, 43 plus 16, 53 and 6, 59-60% roughly. And if I add another 4, I'll add this also. So around 70%. So item number 5, 2, 11, and 1 is categorized as category A. Then I add up 5, 6, 7, 8, 9, 10. They will go to, but he has given the basis also. 50,000 above is A. Let's see. Have we taken all 50,000 above? Yeah. 81, 72, 57. This I took item number 1 into the category A, but its value is 35. So as per the criteria, I'll drop it. So I take only 1, 2, 3, which means item number 11, 2, and 57. Then anything between 15 to 50 is classified as B. So you will see that they are maximum in percentage of value, but in terms of units, they are less. Category B, moderate on both sides, and category C, high on units, less on value. Right? Any questions, or is it clear? Some of you have dropped, so I hope the person who asked is still there. Illustration 8. Muskan, are you there? Right, this is all from my side. If you have any other questions, you may post it in the portal and we'll address. Thank you so much. I hope you enjoyed the session. Right? Thank you, everyone. Bye. Yes, we can end the session. Thank you. Thank you. Yeah, all of you have a nice day. Thank you.